Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, and joining me for this segment, we have Jason Choy, Senior Portfolio Manager at InvestNow. We're here to discuss key investment trends in New Zealand and the first Nasdaq 100 tracking fund in the region. Jason, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Appreciate you having me here.
You got it. Tell us about InvestNow and FundRock.
Yeah, sure. So InvestNow is one of New Zealand's largest investment platforms with over 2 billion in assets across about 40,000 users. So we traditionally started off as just like a fund supermarket type business model, offering externally managed funds from some local and global leading managers. But we increasingly saw demand for low cost options as well and a bit of a hole in the market. So what we did is we partnered with our sister company, FundRock, to launch our in-house range of funds called the Foundation Series funds. And what FundRock basically does is we leverage the existing investment management license and take care of all the kind of compliance and regulatory reporting, and we can just focus on looking after the actual investment strategies there. So FundRock business is quite a cool business as well. So they work with kind of clients in addition to us. Some of the key players that they work with includes the likes of JP Morgan, Schroders, and Dimensional. And key thing to note about InvestNow and FundRock is we are also part of the Apex Group, one of the global multinational financial giants with about something like 13,000 employees now. So quite a big beast that we're part of now.
Yeah, and it's an exciting time. Congratulations on launching the first Nasdaq 100 fund in New Zealand. Can you tell us the idea behind this fund and why investors should be interested?
Yeah, of course. So we really wanted New Zealand investors to get access to some of the top tech stocks, but in a cost-efficient format, because that's really kind of our DNA here in InvestNow. We really want to encourage investors to get the kind of the most cost and tax-efficient exposure, because that way they can kind of have their returns compound better over time. So what the new Foundation Series Nasdaq 100 fund does is invest exclusively into one ETF, being the Invesco Nasdaq 100 ETF or Triple QM, which features just a low fund fee of 0.15% per annum. And that's the same fund fee that we charge on the Foundation Series side as well. Key thing with our fund, though, is it's a locally domiciled option. The structure is what we call a portfolio investment entity or a PI fund. And what that does is it captures a tax rate at just 28% versus the up to 39% in tax that you could be paying if you were to invest directly into the exact same ETF. So what that effectively means in essence is you could start stepping up potentially up to 40% higher tax bill just by going into a more cost-effective structure. So key thing to know with this fund is we do charge a 0.5% transaction fee, but we don't put any ongoing fees on. And the reason why we strategically structured the costs that way is we figured that because we are trying to cater to long-term buy and hold investors, you'd much rather pay lower ongoing fees and slightly higher one-off fees. And that way you can really encourage and allow the returns to compound better over time. And if you're investing in something like Nasdaq, where you're heavily exposed to, kind of high growth sectors and companies like NVIDIA, Apple, and Microsoft, you really want to be a kind of long-term investor anyway. We know very few retail investors can actually make good money consistently by trading. So buy and hold investing, low costs, what slightly higher one-off fees, but over time you should be pretty well, in a good position to have a pretty steady investment portfolio.
And Jason, I'm curious to learn about some of the key investment trends that you're seeing in New Zealand and how does that relate to the growth strategy?
Yeah, great question, Joe. So one of the key things that we've noticed in New Zealand is there is quite a focus on almost a net return. So we know that traditionally investors may have just been more focused on the growth side, so it may not have been as privy to the impact that stuff like fees and taxes can have on your returns. And that's kind of why, we've seen, really ever since COVID, investors are a lot more clued up on that, especially on the retail side here in New Zealand. They really understand how, even a small 0.1% saving here in fees or a 0.4% saving here in tax can really add up and compound over time. It can lead to kind of meaningful impacts on your portfolio, especially if you're looking at something as far as retirement. The other key thing that we've been seeing here in terms of trend in New Zealand is that we know that investors, especially in our KiwiSaver side of things, which is basically like a direct contribution superannuation scheme here in New Zealand, they're increasingly loading up on more risk assets. So, it's a key stat that our local regulator pushed out recently was the likes of something like a risk indicator of 5 or more out of 7, so being a volatility between 10% and 15%. We're seeing investors basically quadruple the exposure to those types of higher risk funds because they understand that although they may be in for more volatile ride in the short term, longer term wise, they'll be well better off in targeting and hitting their retirement outcomes a lot better using these high risk funds. And that's why, it made a lot of sense for us to offer and partner with Nasdaq, for example, to offer something like the Nasdaq-100, where you are getting, that significantly high octane performance, although, with a bit more volatility. But, as we mentioned, longer term wise, most investors will be right out that volatility and get the gains that they're trying to target.
And finally, Jason, tell us more about your collaboration with Nasdaq. Where are you today, and where do you see yourself in the future?
Yeah, great question. I mean, from my side, this is really just the start. So it's quite interesting to know that although this is the first partnership between InvestNow/FundLock with Nasdaq, it's actually also the first that the Apex Group has had in terms of a partnership with Nasdaq as well. So we very much feel this is just the beginning. We'd love to be able to offer, down the track a New Zealand dollar hedge version of the Nasdaq-100 as well, to complement the unhedged version that we just launched, and also explore if there's any other Nasdaq indices that we could offer. So key thing from our side is we want to continue to innovate and continue to offer low-cost, affordable options here to New Zealand investors, and we feel like Nasdaq is a great partner to continue to work with on that front.
All right, Jason, we appreciate your insight and your partnership. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.